Hello everyone, welcome to the family. And tonight we have the chance to have three amazing people from Balderton with us. So there's Bernard, who is the general partner. He created a business object that is sold for $6.8 billion a couple of years ago, and is now the only general partner at Balderton. There's Lars, that was an early employee at Dropbox and then VP of mobile at Uber. And there is Nicolas, that previously worked at Exchange in France and now covering France for Balderton and for their investments. So I first want you to present yourself and say how you became from entrepreneurs or your previous life to VCs.
So I'll start. So Bernard, my life before Balderton was your life, so the life of an entrepreneur. And I started Business Objects back in 1990 after spending 3 years at Oracle in France, and saw an amazing opportunity to create a company in the area of business intelligence and data analytics. So started that from scratch with my co-founder Denis Pair back in 1990. Took the company public in 94. Grew the company for 18 years. At the end, we were $1.5 billion of revenue, about 45,000 customers worldwide, and we were public in the US. We were the first European software company in NASDAQ in '94, and public also in France afterwards. Sold the company to SAP, which was obviously a big milestone for the company, and at that time. After being a CEO and an entrepreneur for 18 years, I wanted to do something very different, and I had done really one thing for a long time. So I wanted to broaden my mind and have the chance to sort of bring back all the things that I learned as an entrepreneur to younger entrepreneurs, and therefore I decided to join a venture capital firm. I looked at a number of firms back then, and I felt that Balderton was the most exciting place, and the places where there was a lot, the best potential to build, and they were the spirit that really gelled with my values, which was how do we help companies build, or entrepreneurs build really big companies globally. And that's when I started in 2008. It was 8 years ago now.
And 2008 was when I moved to the Valley. So I'm Lars Fjeldsoe-Nielsen. Je parle un petit peu français, mais pas ce soir. They make fun of me with that. And no, so I've always been based in Europe. I'm Danish-Portuguese and working for American companies, wanting to grow, and sort of like my sort of passion is really exploding growth funnels. So it's really getting companies to explode in terms of growth, like getting it out there, going international, exploding all metrics possible. And I did this for several companies. I started back with T9 Text Input, TGIC. We were actually based here in Paris, and we were doing, text input. It was very simple. This was when the mobile operators, the data they have, the data revenues they had, there was text input, and that was it. Then we got acquired by AOL. And then, some time later, I went to a music company. When the 3G networks, they started to sort of like open up more bandwidth, and there was all this notion around there were no services available for the bandwidth, and then it was about music. And so we got acquired by Hewlett-Packard. And then I went to a voice recognition company, Voice Signal, and this was about, the time when that became really interesting, and you started to connect the handsets with the service as well. You could do like voice search, like, take me somewhere. And we got acquired by Nuance. And that was the really interesting lesson that was about patents. It started with a patent war with Nuance, and that's sort of like how one thing led to the next. And this is something that maybe we can talk about tonight as well. And then I felt, okay, it's time to go to the US, which was in 2008, as I mentioned. And this was the worst possible time to go over because the whole market just blew up. And this was what happened. I mean, it took me a year to get a visa. I came over there with my little daughter and my wife. And the first day I showed up at work, I was like, really sorry, Lars, we have no more money left in the bank. So I was like, okay, great. And then lucky enough, and this was actually a lesson I took from the Valley very quickly on, people are amazing at networking. And you just, it's like, networking is a verb there. You talk to people and like, hey, what are you doing tonight? I'm out networking, you know. It's sort of like just something people do, like having a drink or something. And I landed with this company, Skyhook Wireless, who did like the location, so Wi-Fi indoor location. They triangulate Wi-Fi networks. See, if you fire up your phone here, you check out the Wi-Fi networks. They're like 20 networks or something. And what they did was they scanned the world, drove around in little cars like you see the Google cars today, and they picked up all the Wi-Fi networks, they plotted it on a map, and they triangulated like the distance between and the strength of the Wi-Fi networks to do indoor location. And this really sort of created this whole platform of services on top of, it was an enabler, right? So you could build all these companies on top of that. Massive lawsuit as well with Google. I got laid off. It was like the company was basically shut down, and I was like, great, here we go again, right? And that's when I met Dropbox, the guys at Dropbox, sort of very early on. I was an employee, you know, in the 20s, and they only had engineers. And this is something for people to think about in here as well. So like you start with a great idea, maybe as fantastic engineers, and at what point do you start to bring in non-engineering people to, you know, change the culture? Let's put it that way, in a nice way. And that was what I was facing with. Suddenly I was the only non-engineering guy there. And of course, I had to really be very sensitive about that. The biggest secret was I'm actually an engineer by education, but I couldn't tell them. They would never believe me if I had said that. And then we started growing stuff. We started making partnerships. So the company Dropbox had just grown organically until then, and we started to make really big partnerships. And this was a massive risk, which is something that I hope we can talk about tonight as well. When do you take risks like that? Like, what is the right time, and what are the things you think about? I then started advising with WhatsApp and Uber, because they said, this was after some years, and they said, hey, Lars, we want you to do the same thing for us that you've done for Dropbox. And got really deep in with WhatsApp and helped them out. They got acquired by Facebook, and that's when I went to Uber. So I became a VP of mobile there, and just was in charge of all the growth, all the non-organic growth, basically, both on the supply side and the demand side. So both for drivers and for riders. It was an incredible experience. Was there for a couple of years, and then I had 3 kids by then, which was a whole different story. And I said, you know what, it's time to go back to Europe. And actually, from the same reasons that Bernard said, I didn't want to go back in and sort of like join another company and, you know, just be super focused. Because the thing that I think we all feel in this room as entrepreneurs is we're super focused, right? We almost get tunnel vision. We know everything about our field, and we know nothing about anything else. And the VC job is completely the opposite. You get sort of like a very broad scope. You don't know necessarily everything about one field, but you know a little bit about everything, which is what I love about the job as well. And I felt, you know what? Europe has completely changed. I mean, you could not have gotten so many people in a room 8 years ago to talk about tech and startup. I mean, you could maybe have done that about investment banking or consulting or something, but not about starting up, something super risky, right? And that's what I love. I love that the European mentality has changed that. It's everywhere in Europe, every city, every major city you go to, you have examples of, you know, guys like Bernard who kicked it off in France, I think is fair to say, that you can look up to and you say, you know what, I want to do what, you know, that guy or that girl did. And it's really amazing for us to have these inspirational people to look up to, and it drives us, it motivates us, right? And then we do the same for the next generation. And this was why I joined in the VC world. I want to help with that. And that's sort of my motivation. So thanks for inviting us.
Yeah, hi everybody. So last one, I'm Nicolas. I'm a principal at Balderton, covering mostly France. So it means that there is a big chance, so as you can hear, I'm French. There is a big chance that I'll be the first contact you will have with us. And basically my job is to scout for the next big thing coming out of Europe overall, and more specifically France, also covering Spain and Portugal, but I have some help for this. And my story is a little bit shorter, but it's funny because, believe it or not, I was at La Poste before, so, you know, I was not a main man, but still. Old school company, a huge company, but I was paid to get contact, to try to bring like entrepreneurship spirit and more innovation spirit to La Poste. So my job was to be in touch with the startups and try to help them work with La Poste and not die. that's difficult because the big corporation, and especially Apple, but overall big corporation and startup don't live in the same space-time, I would say. Time is not like 2 months is not the same thing for a huge corporation or for a startup. But so anyway, I was working there, and then I got the chance to work for a local French VC, Colixange, which I did for 3 years. I really love the job. Basically, what they describe, meeting entrepreneurs, people motivated to build great stuff. I mean, it's quite exciting. Really love the job for this. And Balderton was looking for somebody to be more present on the ground in France, and because there is, as we said, more and more great entrepreneurs in France, great structures to help you build big companies like the family, and so that's why I got hired a year and a half ago, and since then we keep looking and meeting great companies over here.
Yeah, that's something we are really pleased to see too, as Lars said, is that the European ecosystem has changed, and we see funds like Balderton or other foreign funds starting looking at France as a country where startups can grow from. To give you a little bit of feedback of background, Balderton is a fund that manages over $2 billion. They're basically the largest one that's only focused on Europe. So maybe you can tell us how it works, how the investments are made, what you look for, and what ticket size you invest.
Sure. So just to reiterate the background on the firm, if you don't know us well, we raise funds sequentially. So we have raised a total of over 2 billion, 2.3, I think. Our funds now in general are about $300 to $400 million, and we invest solely on in Europe with European entrepreneurs who have ambitions to build global and big companies over time. And our focus is early stage. So early stage for us means Series A. It can mean sometimes seed, but our sweet spot really is Series A, sometimes a little bit Series B. But we want to be the first institutional investor to invest in you when you've reached that sort of magic point of product market fit. So that's what we focus on, and we do that again all over Europe. We have like many, we have more focus on the big hubs, so Paris, London, Berlin, and sorry,
Nordics.
Yeah, Nordics, so Stockholm and Helsinki, Amsterdam also. We have one office, it's in London. We are 8 partners, 7 investment partners, and 1 operating partner. And we have a mix of generation. It's interesting, so we have a partner who still is in his 20s, and we have, no, it's not you. It's not me either.
He was here months ago.
Yeah, James, yeah. So we have partners in their 20s, 30s, 40s, and 50s. And that's, I think, is important because, most tech companies are started by people who are very young, so we want to relate. And we have, I think, one of the characteristics of the firm is that we have people who have built companies, who have run businesses from startup to bigger businesses. We have one other partner who's not here with us today. Saranga has built a business that he grew in the US also. And then we have people who've been in venture for a long time, and we have also someone, Tim Bunting, who's been a banker at Goldman and probably has done more IPOs and more M&As than anybody on the planet. So we have a good diverse group of folks.
And in terms of what you look for, in terms of metrics, founders, what is the right timing to come and talk to you, especially given the current state of fundraising in Europe and in the US? What are you really looking for, and how do you advise companies on fundraising?
So we really focus on Series A in Europe. That's our bread and butter. And I mean, just like you focus on your business and getting your thing right, we focus on our business, getting our thing right. The reality is we're a small firm as well. We're 30 people, and we have to focus. And that's our focus, so Series A Europe. And then you can sort of break it down after that, because Series A, the definition of that changes a little bit as well. It changes over time. It's probably changed now. the period we're in right now as well, where there's a little bit of it's harder to raise funds right now. So you suddenly change the wording of what series you're actually raising. But I would sort of break it down to a couple of things, and it's obviously the team, which is obviously fundamental. It's the product, it's the monetization, and then the timing of the business or the service, and then sort of the deal terms as well at the very end. And I think we all have, this is part of we're an equal partnership at Balderton, which means we all have the same vote. So we vote for when companies come and present, and we meet people. We vote for whether we're going to see if people are supportive or not on the partnership for making the investments. The check size is about $5 million, and so that's our sweet spot. So, and to raise $5 million, it means you need a little bit of signal. And but maybe if it makes sense for me just to go through sort of on a high level. So again, the equal partnership means people in the partnership they cover different things individually, but we all sort of overlap a little bit as well. So we try to make sure we understand a little bit of everything, as I mentioned before, and people have their individual ways of dealing with things. I mean, Bernard, and you can talk in a second, but it's obviously SaaS is his thing. For me, it's very much mobile, for example. And if you look at the elements I mentioned before, so on the team, my way of looking at that right now is it comes down to the entrepreneurs, the experience, like really the passion that the entrepreneur has, like how dedicated they are to this cause, how much they believe in it, and how that all sort of breaks down to culture and execution, I would say. That's sort of, if I think about the team, about small teams, it really comes down to that, sort of like this culture and execution in the firm. So there's I think one lesson to take away that I've certainly taken away, seen companies in very different stages, at any stage of the company, I really encourage people to think about the culture of the firm. What is the culture today? Even if it's like 2-3 people, what's the culture that you want it to be? It's such a strong driver for the execution and the success of the company that is something that we all have to think a lot about. We think about it as a firm as well. And you can of course really dig into the team in terms of the hiring. How do you think about hiring? Do you really have the best people, the people who are most passionate about this area, and etc. Sacrifice is another very strong, topic, especially between the Valley and Europe. Sort of how much are you putting into this? Is this your mission in life? Like, what's driving you? Why are you doing this? Right? Is it just to make money? Is it to change the world? Is it to improve things? Is it like what's the thing that's really driving you? And really try to get that core out of the discussions that we have when we meet with people. On the product and service, and this is again my personal view, and this is from working with more on the the Dropboxes and Ubers and WhatsApps of the world. For me, I look for that simplicity, and this is what all three companies are really obsessed with: is just making it as simple to use as possible, as simple to integrate as possible, and it's really, really hard. Right, where Uber, it's very much like you just click the button and that's it. You don't have to do anything else. Like the way you pay the Uber bill is you open the door, right? You pull the door handle. That's the billing mechanism. It's as simple as that. And with WhatsApp, their logo is like no gimmicks, and this means that you just have to do the very basic thing in communication, and that's it. No gimmicks, right? And with Dropbox, that was sort of like their mantra for simplicity on the product side was it just works. And that means the challenge with that is also you want to add new things new layers in the product, but it's really hard because you want it to be invisible at the same time. So you have that constant balance of wanting to do more, but at the same time not wanting to disturb the picture, right? And that's why a lot of stuff happens under the hood. Then you have on monetization, and the way, again, I look at that, sort of my personal view, and Bernard may have a different view on that, I sort of look at a scale. And you have WhatsApp on one end of the scale, they just concentrate on growth. They just want to explode growth, and you get sort of like the economies on scale in terms of users, right? And then you have at the other extreme end, you have Uber, which is we're all used to paying for taxis, and therefore it's something that we're already sort of mentally prepared to work to pay for. And of course with Uber, the idea that has been executed is if we make it even a better experience, it should be cheaper. It's completely contradictory, the two, right? But it just works again. And then you have Dropbox in between, which is a freemium service. So you get a lot of people in, 500 million users in, who start to use the service, and then they move over to premium once they really sort of literally fall in love with the service, or take it into work and you have more safety features and so on, right? So you sort of bring people from the free and up to the premium service. So they're sort of like in between. And then finally on the timing, which is very, very hard to get right. But and many people say that it's the most important thing. I mean, I've been part of several companies that were just too early, and they just blew up. It was just poor timing, you know. The company I went to the US with, 3Jam, that was messaging. I mean, there was like a Java-based WhatsApp. It was just too early, and who knows if it would have been different after the iPhone had launched, after Android had launched, and so on. So timing is such a big thing. It's just super hard to get right as well. It's hard to analyze as well. And then the final thing is the deal terms. And this is more a final part of the discussion. Like, what is the right valuation on the company? What's the setup of the partnership that is that is kicking off really? And this is a very long-term partnership. That's the way to look at it. So that would be my long-winded answer.
I just want to give you maybe some practical also, not suggestion, but observations on when we invest. And for you, maybe you're wondering, well, maybe I should go to Balderton or I should not go to Balderton. Do I qualify or not? So practically speaking, it depends a bit on what kind of industry you are. If you're in B2C, if you're in B2B, our criteria are slightly different. So for instance, you don't necessarily need revenue. So if this is a question, do I need to have customers and revenue? Revenue is not an absolute requirement for us. So if I give you an example, I imagine, and most of you know Sunrise, the calendar app, which we invested in a while back, which was acquired by Microsoft. When we invested, Sunrise had no revenue, and when Microsoft bought them, they still had no revenue. That company had never experienced revenue. But what they had was they had a product. The product worked. The product had users, and they had a fantastic traction. So they already had hundreds of thousands of users, and they were coming back, and they were using the product every day, and they were accumulating more and more users without doing any marketing. So there was clearly a really strong momentum of the company. And so that's, I mean, the team was small. It was 10 people. But that was a good sweet spot for us. On the other hand, on the B2B side, so if you're a company that builds software for enterprises, we would expect you to have a product, and we do expect you to have customers, and we would expect you to have revenue. So on that end of the spectrum, when we invested in Talon, actually that was my first investment in beginning of 2009. The company already had about $3 to $4 million of revenue, had really good traction, but the company was all in Paris. Today, now the company is way bigger. The team is partly in the US, partly here. Actually, the management team is mostly in California. The R&D continues to be in France. But that's the time when we felt it was really the right time for us to invest. So in general, we would expect you to have a product, to have people using your product. So if you are like in design or thinking of something, or you're in beta, it's probably not for us at this stage, or you would be really exceptional circumstances. I don't know if you want to add anything to this.
Yeah, no, I mean, what I can add is that you build a relationship with a VC. So it's always good to get so that the VC knows about you, that we know about you, even if we know it's not for us now. So don't speak too much. Don't spend too much time like trying to to speak with us if it's really not the good time, but it's also part of my job to meet company early, even if I know we're not going to invest, to get to know you, because one of the things, it's a cliche, but it's kind of true, and the more I'm doing that job, the more I feel it. We are also investing in people, and you don't know people in just like 1 or 2 meetings. You know them over time, they call you, they give you updates and everything. So that was one thing, and the other thing, what I can compare to my previous experience, if you come to talk with us, so like ambitious VC, you need to be really ambitious. This is like the main difference I see with my previous job, is that we are looking at Balderton for people that want to build huge stuff. And sometimes I say to entrepreneurs, listen, you have a great business, a great idea, but you don't need to raise with VCs, or maybe not like big one like us. Maybe you just need to raise a smaller check, because you can do a great business and without reaching $1 billion. But if you want to come to talk with us, it's because you really want to build something big, and this is what excites us, and we're here to help you build huge stuff. But it's not always the case for all the businesses.
Yeah, of course not. Getting money from VCs is also a commitment to a certain vision and a certain kind of companies you want to build. It's not made for everyone, and that's why also VCs say no sometimes. Often, yeah, you have a lot of good business.
Basically, it's not really sexy to say that, but I would say 90% of our job is to say no to people, because I mean the VC funnel. Like when you're in marketing, digital marketing of a funnel, we have also a funnel with number of company, number we invest in. I don't really want to give you the numbers because you'll be depressed. But it's mostly to say no. Like overall, we do what, 8 to 12, 14 investment a year? Yeah, less than 10 recently. So, and yet we meet more than 1,000 companies. So you see, so yeah, 3,000.
So even given the current fundraising market, you advise companies to focus on growth only and no revenue sometimes?
Sorry, say that again. Growth only.
Even given the fundraising market today and the doubt some people have of what it's going to be in like 1 year or 2 years, you advise companies to have no revenue and focus on growth only today?
Well, it depends again in the business you're in. So if so, for instance, when we were in Sunrise, we never pushed them to monetize. We said just focus on getting a large user base. We are today in a company that you may know called Citymapper. Does everyone know Citymapper? Yeah, probably.
People have Citymapper.
Have you used Citymapper on their mobile app? Well, all the ones who don't have it, you should download it. It'll help you go back home faster. Anyway, it's a great application. They have millions of users right now. They're not focused on monetization, and we're not pushing them on monetization. And they've already raised a Series A with us, a seed first and a Series A, and they just raised a Series B at a very high valuation, and they raised actually $40 million at the Series B. They're still not generating $1 of revenue. And that's okay in this particular case because it's a strategic play, and I think the good sequence of things that when they really own cities, and right now they own London, but and they're growing fast in Paris, they're growing fast in New York. When they have that ownership, then they will have a number of monetization avenue, but it's not time yet. But again, on other companies, the fabric of the business is a revenue-generating business, and then we're pushing, and therefore revenue is going to be the main metric of growth. And a number of companies are going to be user-based, and others are going to be revenue, and that we're very clear. What we try to make sure when we discuss with you is that do you know what is your core metric, what is going to define your success, at least for the first years, and then we focus on that with you.
Just for growth, there is like, you know, like les inconnus, le bon chasseur and le mauvais chasseur. There is good growth and bad growth. So we invest in growth, but obviously, like if for every $1 you spend to bring one new customer, or for every $2 you spend, you bring only $1 in growth, this is not good. So be sure before raising those big rounds to master your unit economics. And so yeah, to answer your question on growth, it's yes, well, you can still have a growing company without revenue, but if the growth is not, you just don't pay it with crazy amounts and basically throwing money out of the window, which sometimes was more or less the case in the recent years in some large deals that happened and then went down.
And, the one thing I would add is that in general at Balderton, we try to look for businesses that are capital efficient. So we want growth and we love growth, but not at all costs. And so that makes us a bit different than some investors. And in particular in the US, we've seen a number of companies that have grown substantially. But when you look at how much money has been invested for that growth, it makes no sense anymore. And partly it's because of our history. And I mean, in my case, Business Objects, we raised 3 rounds of venture capital back in the 90s, but our first round was 1 million, our second one was 2 million, our third round was 2 million. So we raised a total of 5 million, and when we went public. So to me, that's a good benchmark. But you know, there are companies in the US, I'm sure you have a lot of examples, but there's a company that does what Business Objects was doing before. It's called Domo, it's in business analytics. But this company has raised $600 million of funding, 600 million, and right now they probably do 1/10 of that in revenue. So we're not looking for this kind of models. So we want good businesses, but that turn out also to be good investments.
And for companies that have operations locally, so you expect them, if it's transaction-based, to have revenue, do they need to be like in Paris and in London, or when is the right timing to come and see you? Do you want them to be European already or not?
No, absolutely not. But it's more the aspiration to grow something really big. So it means if you only have revenues in France, if you only have revenues in a certain country or even city, but as long as we're looking for signal and growth, right? So, and then for massive aspirations, and this coming back to some of the differences that I've seen coming back to Europe now again is, I think we were, as Europeans before, we sort of prone to say, hey, I want to rule, I want to be the biggest in France. You know, in Denmark that was certainly the case, and I've seen that in many places in Europe, where we were sort of thinking within our borders, and that's gone now. Those borders have disappeared, which is amazing. So I think mobile played a big role in that, where we could, you know, build something and we could go global immediately. It made it a lot easier as a platform really to go global. So the answer is no, we don't look for somebody who's already having revenues abroad, but we're definitely looking for people who have, you know, really want to build something big and not, you know, cash out early, so to speak. But one other point I just wanted to make on growth, which I've sort of seen be super useful, and you know, it's this notion of, I mean, Nicolas mentioned, you know, raising money to go and buy advertising, which is okay, but it can also be way too expensive, right? And it's in times like now where we invent new stuff, where we think about, hey, what are different ways for us to do growth? And one thing that I've seen to be very, very useful is this notion of like inventing a growth currency. So with the service or the product that you build, like think about what's your growth currency? What's the thing that makes it an incentive for people to invite other people to use the service, for example? And this may apply a little bit more on the consumer-facing side of businesses, but this notion of a growth currency, I think, is really powerful. And it's things like, you know, again, coming back to Dropbox, that was space. You know, coming back to Uber, there was free rides. Like, what is that thing that really will incentivize people to invite people, and where everybody on both sides of the equation will benefit? And I think that's, you know, in times like now, this is where things like new ideas, they come up, new ideas are invented. And then the nice thing about that is other people will take those ideas, copy those ideas hopefully, and make them even better, right? So we're building on what everybody before us have built, and we're making it better, we're making it different, and technology makes it possible to do things differently, right? Which is really exciting about what we're working in, this industry that we're working in.
So the goal as an entrepreneur to raise money with you guys is to build momentum and find impressive things that actually impress you. Can you tell us one thing that you get impressed with, or like, yeah, in terms of founders is too easy because it's always the case, but like in terms of revenue, or in terms of growth, in terms of number of countries they operate in, what is the thing that's building momentum for you?
Well, we may have different answers to this. I mean, for me, it starts, I mean, besides the founders and their drive and their vision and the spark in their eyes, to me, it's the product. So is this product or the service, whatever you provide, is this truly new? Is it truly different? You bring something that we have never seen before. Is it really 10 times better than what exists? That's really, so we're like, for instance, if you have a version of something that exists in the US and you say, hey, we want to do the French version of X, so not interesting for us. We want something, at least what excites me is something where I say, oh my God, I've never seen that before, what an amazing idea. The simplicity of it can be great too, because you want to, the emotion you want to get into us, at least certainly into me, is that why didn't I think of this before, right? It's so good and it's so obvious.
So if it's a completely new product, it also means you need some proof of the market to actually say it's useful.
Yes, I mean that's it cannot be just a cool invention that has no use. So that's why we have the momentum that is a great, again, if it's a consumer product, we would look for that validation. Is there like a very fast user growth, and without the need for marketing? It's like viral kind of growth.
Even in B2B, one of the most recent investments we did in France in Aircall, it was quite small actually compared to what we usually do. But what got us excited, it's also that they had like customers in more than 100 countries and more than 700 customers. So basically, there were proof that there is a product market fit. It's because we were like, okay, yeah, this is a good idea, but do people really need this? And within the numbers, like, okay, 600 people or 150 countries, even if it's small numbers, they can't be wrong. They're filling a gap. There is a need somewhere. And after, so you have the growth. And personally, I like, I know not all of the VCs are like that, but I like the market. I'm like trying to see, okay, which way this market is evolving. Okay, this is exactly in a big trend we're seeing, like, I don't know, decentralization of the workforce or those kind of things. But that's only one thing. The market needs to be here, but if there is not the spark in the eye of the entrepreneur and not a few metrics to prove it, you can't just invest in a market trend.
Maybe want to add a more human aspect to that. I mean, French are just really good at math, It's just, I mean, it's a massive advantage to have that, and imagine the things that you can invent out of that, right? It's built into the DNA, into the human DNA in France, to the educational system, and now it's starting to blossom in the companies. That's an incredible foundation to build companies on, right? That could really become billion-dollar companies on a global scale, because that's the foundational element, is like for technology companies. So that's something that I've been really impressed by.
Cool, thank you very much. So yeah, there's something we like to say is that success is obvious. No one really understands when we say this, but it's what they say. It's that you just don't spend money and it actually works, and people use the product. And then usually you're going to be able to find a VC. Might not be Balderton or any other fund because they all have specific criteria on what they look for, but usually that means you're on the right timing. I want to switch to questions from the room. So if you have questions, please raise your hand.
Well, hello, I'm Annick Charbonneau of Soul City. We're a startup from Montreal. There's two of us co-founders in Montreal, but there's one here in France. And my question is for you, Lars. I really liked your comment about the fact that once you go mobile, you can go global right away. Now, it's interesting because some VCs in Montreal have told us, no, grow your base in Montreal and then move from there. So we've completely ignored that advice, and we decided to launch on 2 continents right away. So now we're growing in North America and France for now at the same time. And what we've seen is that we have an audience growing quickly in both markets. So I'm just curious what your advice as a VC would have been to the same question.
So maybe not so much the advice as a VC, but more as an entrepreneur myself. And this is what I've been doing all my career basically. And it's to really prioritize the markets. I strongly believe in that. It's so easy to get tempted about doing everything at once, and you just can't do that. No company can do that. And it's just to be very thoughtful, and what I've always tried to do is to put a little bit of sort of like a framework around, like, what is it we're trying to achieve? What's the objective with the growth? And then sort of like reverse engineer that. And maybe I've done a lot of mistakes. One of the mistakes was at Dropbox. Like, one of the things we did a massive partnership with big mobile OEMs, and we launched everywhere at the same time. And it actually meant we got a lot of users in, which was fantastic. But could I do it over again now? I would not have gotten all the users in from everywhere, because a user in a certain country is just worth a lot less than in a different country, because they would have less, they would have less to pay with, etc. Right? So I would just like really prioritize it. But the other thing to think about now is, like, competition is global now, right? I mean, and time is against us the moment we start. It's already against us before, and there's the reality is, like, it's very hard to come up with an idea that's super unique. Somebody else, look, hey, why don't we launch, rovers on Mars? Why don't we launch, human populations on Mars? It's like people have thought about it. It's like really about the execution, right? And who can pull that together. And so for me, it's sort of like competition is global from day one. So I'm definitely leaning more towards the, like, really go big, but be very, very thoughtful about it as well. One other thing I would add is, I've seen with some of the companies that I've worked with in the past, like launching in Japan. Japan is quite an interesting market, because people spend a lot, they become really excited about stuff, and really things can take off. And language is a big barrier there. And I've seen, again, and I have several data points of this from big companies, where there was 20% uptake in the services the moment, like, you translate it into Japanese. So language becomes another metric to consider.
I just want to, before any other question, just want to make an observation. Having built a company in France and in the US, and what I see happening now in Europe, it's super exciting, because as Lars said, there's a lot more of you wanting to build companies. The one thing I would say is that you should feel empowered to be really, really ambitious. Right now, it's a bit, there's always a little bit of a sense that only the guys in California have the sort of the legitimacy to say, we're going to build the electric car company of the world, or we're going to build the social network of the world, or we're going to build a search engine of the world. And let's not let that perception or continue to way over our head. Anybody in this room can build a global company that can be one of the top businesses in the world, and a top business in France, certainly. So it doesn't mean that we should just say, hey, I'm going to be there. And that's it. It takes an enormous amount of work. It takes the recruiting of very, very big talent. It takes resources, etc. But the ambition needs to be there. It's not going to be just the Californians or the Americans who are going to build the big companies in the world. So please take that with you, I hope. And then when you build your business plan over the long run, if you have a great idea, feel really ambitious about it.
Hello, my name is Octavian. I represent Alliance by Daria. So I have actually 3 questions, one for each one of you. I will start with Bernard, if I may. You mentioned that all the partners have equal voting power. What was the duration of the fastest vote to invest in a company? For Lars, you mentioned that if you go mobile, then you can have global coverage. I'm interested, how would you advise a startup to scale if they have a hardware consumer product? And for Nicolas, hi. My question is, in general, how long are the first emails that you receive from founders? Thank you.
So in terms of the time, you know, the shortest time, and I could say it depends from one to one, but we have made decisions in 5 minutes. So the entrepreneur comes to the office and presents to the partnership, and as soon as the door is closed and the entrepreneur is left, we said we need to do this, and we do this, and then evening we send a term sheet, and we close, you know, a couple of weeks later. So we can go extremely fast when we are excited.
In terms of hardware, so my basic observation, I work with a lot of, I'm probably skewed a little bit towards mobile because I worked a lot in mobile, and it really comes down to partnerships. So to partner up with companies that can do the thing that you just have to outsource. So just focus on the thing that is maybe the design, maybe it's the, you know, maybe it's the brain of the unit, whatever the unit does, and just focus on the absolute critical thing and outsource the rest, because it's unfortunately often it's a race to the bottom, and you can spend so much time on the manufacturing on something which may not necessarily be the thing that really adds the most value. So if I were to do a hardware company, which by the way I love hardware companies, I think it's super fun. I'm a mechanical engineer. It would be to really partner up with somebody and just really add the magic and outsource the rest.
And for the email question, I would say short. You need short email, but basically the idea is that it's better if you can have an introduction, like if you can get somebody that I know that tell me, look at this, it looks interesting, but you can still send cold email. We do look at them. So obviously make it short and make it like marketing, like catching a catchphrase, something, show that something is growing. You need to find an angle, and it doesn't need to be in revenue, but like, hey, we have 20 times more customers than 2 months ago. So even if it's tiny numbers, still that catch our eyes. Or we have the biggest retention in the mobile app ever. Once people use it, we have a huge stickiness. So, and we're like, okay, let's look at this. And so not too long email, but to catch our eyes so that we want to meet you. After it's in face-to-face meeting that we decide if it's worth dealing or not.
Hi, so my name is Eduardo. I'm from Marcus. We're building an action camera that records from 6 different perspectives. So it goes back to the question about hardware. I guess, Lars, you already answered that question. For Mr. Bernard and Nicolas, what are your thoughts on investing in hardware? What do you look for exactly, the main thing that attracts you the most?
I mean, for me, I won't make a particular difference between hardware and software in terms of what I look for. It will be, again, something unique in the product that is so compelling that people want to have it, and understanding what the customers say about this particular piece of technology. It has another bar that needs to be jumped over compared to the software companies. Software companies are by definition, they're more capital efficient than the hardware companies. So we're going to look a lot at, okay, well, how much do we need to invest in capital to grow that hardware business, and what are the margins going to look like? So if in software you have, I mean, if you sell a piece of software, as you know, you have 98% margin. Everybody loves this. But in hardware, you'll have less. So it means that you need to have other ways where you're gonna create a more, I say, efficient, P&L efficient business. So if you have lower margins, you have a lot more efficient sales and marketing, or a lot more efficient distribution systems, something of that nature. But again, at the core, we look for, is this a beautifully designed product that is very different than anyone else? And that, so we've done, yeah, I think we can talk about one hardware company that we've done called Roly. Does anyone know Roly here? No, not many people. So Roly is a music instrument business. So quite far from what we would do normally, but it's an amazing company that has designed a different kind of keyboard with soft keys, so that you can actually play as if you were playing on a guitar or on a string instrument on a keyboard. And it's so it's completely different. The hardware is absolutely beautiful. When you see people play on this kind of instrument, it gives you goosebumps, as we say, because it's so amazing. And then this is the base of a very ambitious play in connected music and different blocks and redefining the way music is being created and is going to be played in the future. So that's one good example where the product is amazing.
Hello. When you invest in companies, do you get involved in their operation and strategy and leverage your expertise, or do you let them manage their growth and just manage them from far, not closely? And also, before investing, do you think about any exit strategy, whether it goes well or wrong? Do you have, like PE's firm, do you have any exit strategy in the back of your mind, or do you manage this based on how the company grow and how you decide at the later stage what you're going to do with the company, whether you exit or whether you
so I think in general, we're very hands-on and engaged investors. So we come on boards. We worked a lot with you, and so the CEO, the founder, we will work with him or her very closely on strategy and execution. So we want to bring, I mean, again, one of the characteristics of our firm that is different than anyone else is our operational experience. We've had the chance to participate in journeys of great companies, so we want to bring that back to you, and that's one of our unique characteristics. So yes, we're engaged. We'll engage into strategy discussions. We'll engage into a lot in terms of how you go expand international markets. We'll engage in hiring, qualifying people, helping you interview the people. We'll obviously be very engaged into your future rounds of capital. So one of the things that we have as a firm is that because of our Silicon Valley DNA, we're very connected to the US and very connected to the rest of the investment ecosystem. So we will help you raise the next round. We will help you a lot with strategic relationships also with other big software or hardware firms. So we are very engaged. The second part of the question will be that, at least my view is that when I invest, I don't think that much about the exit strategy because who knows where it's going to be, what it's going to be, and I think if you build a company already starting to think about the exit, that actually, to me, it's a negative criteria. If there is a slide in the deck that says, "Hey, here are the exit opportunity, and 3 years from now you can sell for 5x to Microsoft," and this, I say, okay, well, not the right plan. Because what we want is for you to have ambition to build an enormous company. If you build a great company, there will be plenty of exit opportunities.
And the thing to add to that is just connected is the size of the opportunity again, and as opposed to the exit. More, is this something that we could see together be really, really big, like on a global scale, be huge? And that's what it's about, right? And then the reality is, I mean, nobody knows how to get there, like how to get there all the way. You make up a lot of it along the way because things change, the market change, we change, the team changes, everything changes. But there has to be somewhere out in the haze, there has to be, okay, a massive opportunity. And it can be obviously many, many years out, but conceptually there has to be something big out there.
Hi, good evening. I'm Julian. I'm building Relive, a music company that helps artists and label record their show and distribute them right away. And I was just wondering, what size of market you're looking at when you invest in a company? We're talking hundreds of million, billion, tens of billion. I mean, what's the minimum size of market you're looking into? Thank you.
Well, I think, we're looking for big, as Lars said, and sometimes the market is not developed yet because you're building the market. You're building what they quite often call the blue ocean, right, where you're actually creating something that didn't exist before. So it can be okay. As an example, we invested in a company in Barcelona called Seitel. The company does software for elections so that governments can run elections on the internet. This market is a tiny market, or at least was a tiny market when we invested, because nobody ran elections on the internet. So they had, remember the first meeting, they told me we have 70% market share. I said, wow, fantastic. How big are you? Well, we're doing 3 million. Okay, so you have a $5 million market. That's exciting. So that's a tiny market, but if we have a belief that you can develop this market into a multi-hundreds of millions of dollars, yeah, I mean, that's exciting. But eventually, it needs to be a very large market. As Lars said, we're looking for companies that can be really, really big. And you know, we hear a lot about unicorns, this, unicorn that. To me, I don't particularly care about unicorns. I think $1 billion is a good mark for a revenue number, not for a valuation number. If you can build $1 billion revenue company, that's good, right? But so look more for the size of your business. If you have a market in which you can grow into several hundreds of millions of dollars of revenue, that's exciting for us.
And so usually when you can't say we don't know the size of the market, is you look if it's a universal need or not. So like for example, Uber moving around is a universal need. Voting is a universal need. So listening some music, a priori, universal need. So.
It's good to see other colleagues working on hardware, so I'm going to ask yet another hardware question, sorry. Can you just tell us what percentage of your investments are in hardware versus software? And a follow-on question to that is, how important is barrier to entry, and what do you consider barrier to entry for a hardware business? Thank you.
So to be candid, we have not invested in many hardware businesses. So it's probably a handful of businesses that are purely in hardware versus probably 100 or so active companies. So we haven't done that much. But obviously, like any informed investor, we realize that there's a lot more going on in hardware now than was happening before. So we look at it. We don't have an aversion to hardware. So again, if we see a compelling idea, a beautiful design, a way to build the company in a capital efficient way, we'll be excited about it.
Thank you very much. Big round of applause for the three of them.
Thank you.
Que la famille.